Hello, welcome to Governor Traders Boutique. My name is Noel, and today I want to share with you my trading strategy that I use for volatility indices. Simple strategy, but it's amazing. It's amazing. It takes money. It takes money. Okay, so you can try this one. You can try it. You can try it. Okay, so the strategy is a combination of flags. It's a BTMM and ICT. So mainly I trade flags on volatility indices. No flag, no trade. Okay. So I've been trading flags like on naked charts. Then I found out some, in case where a flag fails, BTMM will come into play and help you to detect false flags, and also BTMM will help you to detect the trend direction and also on level counting. So basically, I use this flag strategy mainly on M15, but it's also used for an M5, M30, H1, H4, and other time frames. But it's because the flags appear more frequently on M15. So it's good for a day trader and scalpers as well. Okay, so basically I use flags. So there are rules and guidelines that I've found that I've discovered that may increase the accuracy of this flag strategy. Okay, so this is the flag, and for the flag to be a correct flag, it should approach or touch the 50 EMA. My 50 EMA is that my dark blue line. Okay, so it's one confirmation. But when a flag appears on level 1, since 50 EMA will be close to 200 EMA, we can allow it to touch both 50 EMA and 200 EMA or somehow. Okay, and also for a flag to be a correct flag, we need to have a shark fin. I mean this one on TDI, a shark fin on TDI. Okay, so shark fin will be our first leg, then our second leg, then that's where during our second leg that's where we start expecting the flag to break our, in this case, our support level. Okay, so for my entry rules, I use ICT order blocks. As simple as that. Order blocks, that's the confirmation of my endpoints and other indicators. Order blocks is the core of my entry points and other indicators that confirm my entry. Then we go and we take money. Okay, so using this strategy, we come and identify. So after seeing this flag is forming, then we can identify an order block. So I no longer use like that method that you use. If we see a flag, a candlestick that breaks outside of the support or resistance of a flag, then we enter. Some of the times you find fake breakouts. And how to detect ICT can help to detect or to avoid those false breakouts. Okay, so how do I draw my order block? Okay, after identifying the first leg, then during the formation of the second leg, I have to identify, like in this case, the bearish order block. So I have to find out a bearish candlestick, the last bearish candlestick before the last bull run that formed that high. I hope you understand. If you have ever heard about ICT, it's easy to understand this one. So let me draw my box here. So is that this red candlestick? Okay, mainly okay, I don't like taking its wick in this direction, in this lower part, but on the upward part I can take the wick because it helps me for my stop loss. So this trading strategy, it creates the like tight stop loss. It gives also sniper entries. because I use heavy lot sizes, so I need a tight stop loss. Okay, so instead of entering where this candlestick closed below our break, our flag, I wait for a candlestick to close below this order block. Then after closing below the order block, I wait for a retest back into the order block. Then that's where I pull my trigger. So in this case, I wait for it to come back all the way into this order block. That's where I pull my trigger. But this is a liquidity zone. This is where institutional orders are pegged. So market is coming out to take the sell, to trigger the sell orders by those big players, market makers. So we eat together. Using this strategy, we eat together with the market makers. Okay, so if in case where the candles, that order block is very wide, we can find them, we can go to the middle of it, we divide it in two, then we put our line. Yes, almost at the middle. Okay, let's assume it's at the middle. Then that's where we take our trades in case where the width of that order block is long. Okay, because we want to make our tight stop loss. So my stop loss in this case will be if the bullish candle closes above this order block, then I close my positions. That becomes my stop loss because I'll be using heavy lot sizes. Okay, so in this case, it broke below the order block, come back and collect orders, then boom, there was a bearish run. Okay, as simple as that. That's how I use this. So the first thing I need to have a shark fin, and my retracement may have to approach or touch 50 EMA for it to be called a true flag. And yeah, the rest I think I've explained well. Let me try to look for another example so that I illustrate. Yeah, this one also, it's a flag. So as I said, a flag, I will use the term flag to depict those wedges, triangles, pennants. It's a family of flag. Okay, so in this case, I draw my flag as usual, and I look for a shark fin. Is there a shark fin during the formation of my flag? Yes, I found one here. Okay, then so it's a true flag. Okay, so I go to draw my order block. The last, in this case, is a bullish. So the last candlestick before this, the second leg. So the second leg is this one. So before the low of this second leg, so the last bullish candlestick is that one. Let me draw the box there and highlight it so that it becomes clear. Okay, so I said I take the body this side and the wick that side is not that important. Okay, here we are. That's our order block. Okay, as I say, if the width is long, then we divide it into two. But this issue of dividing, sometimes you will miss entries while you are waiting for it to come to almost half of that. But it's safe in terms of your stop loss will be very tight, and in case of a loss, you don't lose much. Okay, so the dealer after closing above comes back, collect orders, then boom, it was a bullish run. Nice. And also another confirmation that I use for my entries, if that pullback comes and touches my 21 EMA, it's also a confirmation. But 21 EMA is not the rule that I use, but it's a confirmation for for my orders. Okay, let me try to look for another flag. Okay, here it is. Okay. First thing I look for a shark fin. Can I see a shark fin? Yes, I can see a shark fin. Then I draw my flag. Okay. After drawing my flag, then I identify the order block. In this case, the bearish. So I identify the first leg. The first leg of an M is this one. Then the second leg. So the second leg, formation of the second leg, the last bearish candlestick that formed. So I saw is that one. Then let me draw my order block. Here it is. In this case, the wick downward is not important, and upward is very important. Then in any case, if it's too wide, I divide it by 2, almost half, then that becomes my entry point. Okay, so I wait for a candlestick to close below order block. Then I found that this candlestick closed below. Then I wait for a retest back into the order block. Then I pull my trigger. Then there was a nice bearish run. Okay, then for take profit, you use the flag, the length of the flag of the flagpole. Then that's what I use for my take profits. But normally, since I use heavy lot sizes, I take profit before it even reach there. And for if you use like a heavy lot size, you can use this as your take profit. The width you take it like this. The width of this. The width of this flag pattern. Then I take it, I place it here. That becomes my first take profit for my big lot sizes. Then I allow others lot sizes to go, because big lot sizes don't need to hold for a long time unless if you are trailing. Okay, you may find another flag. Here is another flag. Okay, it approached 50 MA, correct? Can I see a shark fin? Yes, I can see a shark fin. So I can trade it properly. So it's a bullish one. So I look for an order block, a candlestick, the last bullish candlestick before the low of the second leg. Then what's happening with this? Okay. All right, this is the candlestick. Then you can probably divide it by 2. So if you see the order block, if that candlestick is like this, very small, or a doji, or kind of a doji or a hammer, or what, the body is very small, then that would be a sniper entry. Then you can use the biggest lot size that you can. Okay, but of course, don't be carried away. It's not a 100%. It's not 100% win-win. Okay, sometimes these things they fail. So in case of failure, we don't need to damage your account. Okay, right. So I wait for a candlestick to close above. Then I wait for a retest. Boom. Then I enter into this trade, make money. Okay, can I find another one? That was kind of that's kind of a setup. If you were trading flags on naked charts, we're going to take this one, but according to my rule, it's not proper. Why? Okay, this is a nice flag structure, but according to the rule, it's not proper because we don't have a shark fin in this end, so you don't trade it. Let it go. Okay, discipline. And also this one, it was a nice flag, but no shark fin. We don't trade it. We leave it. Okay, as simple as that. Maybe I can try to find another another index as well, V101S. Let's see. Okay, let's see V101S. All right, let's try to look for those flags. If we can find one, it's closer this way. Okay, that one, no shark fin, we'll leave it. So we need to follow. Okay, I got this one. I've already drawn it. It's okay. Right, in this case, I look for my, it reached 50 MA. It is around that level, so it's still in my so we're still governed by those rules. Then like in this case, first leg, second leg, here there's a shark fin. Okay, of course at the second leg, no problem. All right, it's now time to draw my order block. Last bearish candlestick before that high. So my bearish candlestick is this one. In this case, it's this one. So allow me to extend this one. Allow me to extend it like that. Okay. Oh. Okay. Let's see. Didn't push it because I don't want to trade this week. Okay. Right. So this one broke and it didn't give us an immediate retest, but later on it came back and here it gave us an entry point here. It was a good shot. Then another one here, but after finding the first retest, then you need to use it again. You don't need to use it again, so we're gonna trade this one only, then it's over. Okay, that was another nice setup. Okay, so there are many charts. On charts there are always flags and flags and flags and flags and flags. We can talk and talk and talk and talk. This one was a flag, but no shark fin, we didn't trade it. Okay, we need to be disciplined. Okay, so basically that's how we trade these. Let me see if I can find another setup. This volatility 100. Let me check if I can find them. Here, of course, we are looking for clear just for illustration purposes, but it's not always that you can find those clear flags. Okay, this one was a nice flag game. There's a shark fin. Yes, there's a shark fin. Then I draw my order block. The last bearish before that high. Okay. So the last bearish we used that. There's that doji. Yeah. That's doji. Let me see if I can draw it properly. So you're gonna use this doji. Right. Here there's a conflict of two strategies in this case. And as a result, we're not going to trade this one. Why? Because according to flag strategy, it is this candlestick that broke below the flag, but we already had a candlestick that broke below our order block and retest and give us an entry. But since our strategy includes both flag and ICT and BTMM as well, we were going to miss it because of our hybrid strategy. It led us to miss some of the trades, but it's always cool because the time that gives us trades that will be on point. Of course, that was a clear flag, but it's just that our order block was higher than the break of this flag, so we'll just let it go. It's painful, but that's it. You need discipline. Okay, so basically this is how this trade works. You miss some of the trades and you catch some. So yeah, that's it. And yeah, in this case, I think again, let me demonstrate this one, the last one. This is a nice flag. This is a nice flag. We draw our support and resistance. Nice one. Okay, nice one. Then wait for it to, okay, then we identify, is there any shark fin? Yes, we find a shark fin here. So we find a bearish what candlestick that close below, a bearish candlestick that close, sorry, just before those that upward what. So in this case it was this one. So it's the same candlestick that closed that order block and that closed the flag. And for the end, it didn't come back to give us an entry, but later came. But yeah, it was too far. We can't use that one because it was after some time. So because this order block for 15 minutes, they need to work immediately, because after that they are invalid. But order blocks for H4 D1, you can use it even next week after drawing today. They will be still valid. Okay, so this is just a glimpse of this strategy, flag patterns plus BTMM plus ICT, a cool strategy. It's amazing how you can combine all those three strategies and form one strategy. So basically, it's a strategy for those who are heavy traders who want to get sniper entries, and it's also good for day traders as well. Okay, so yeah, that's it about my strategy. Thank you for your time. Cheers.